Bitcoin has now seen weeks of consolidation above 90,000. In today's video, we are going to be discussing exactly what needs to happen for Bitcoin to finally break free of this major consolidation. We're going to be discussing everything from the short-term charts, the macro implications, the total market cap, and even the altcoin market. Let's go ahead and jump on in. Good morning, MegaWhale team, and welcome back to the channel. Thank you for tuning in. In today's video, we are taking a look at the upcoming weekly candle close, the altcoin market, the total cryptocurrency market cap, and of course, Bitcoin on the short-term and macro charts. The markets are becoming increasingly boring as this sideways chop and consolidation is extending well and truly into the month of February. In today's video, we're going to be discussing absolutely everything you need to know about what is happening and what needs to happen for the price to make a definitive directional moves. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. Completely free channel. You'll get access to charts, updates, videos, educational posts, news events, and really everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us on the VIP channel. It has been running for 50 plus months since 2021. You can find our entire trading track record by clicking the pinned comments in the free channel, by clicking the first link, or the second link to show you a 10+ minute video inside the VIP channel itself. We have over 700 members who have been running for 50+ months. You'll get access to 2 channels, the main VIP group where we post trading setups with exact entry prices, targets, and stop losses, and the second one being our group chats where you'll get access to talking to all of our members and of course discussing trading and charts on a daily basis. Check it out, join up, and we'll see you in there. Let's dive into the video. So as we can see, and as we just mentioned, the market over the past 3 or 4 days have become incredibly boring as we are just seeing the price action essentially closing these daily ranges almost identically to the open prices. We've seen these massive doji candles, from our dojis to our long-legged wick doji candles, essentially signifying that over now the last 3 and going to 4 days, we are seeing a whole bunch of indecision at these levels of short-term support, which we're discussing in today's video. We of course have got the weekly candle coming up very shortly. This is going to be under 24 hours time, and we're going to be discussing the significance of this weekly range and this broader consolidation we're looking at here on that weekly and daily chart. We'll of course be going into the short-term price action, discussing what the buyers will need to do here to reverse that price back upwards, and why there is still hope for Bitcoin to see a stronger rally into the later end of this month. We'll also be jumping over the total market cap, the total 3 market cap, and everything else. Let's move over to our market data to start off with. Taking a look at 24-hour volume and liquidations. Now, volume and liquidations have dropped a significant amount. As we've mentioned, the volatility in the market has been dropping off for the last few days. Even if we take a look at this hourly chart here, we can start to see just how little movement we are beginning to see for Bitcoin, even on the short term, with most of these swings on the short term becoming weaker and again slower. So we are seeing volume dry up, we are seeing liquidations dry up as a consequence, down 50% and 65% respectively, with $100 million in liquidations, the majority of those coming from shorts at 60 million and volume sitting at 106 billion. Actually, some of the lowest volume we have seen for quite some time, maybe even for 2025 so far. So very, very low volume environments right now. Moving over to the DXY not doing too much, of course. It is closed at the moment, watching for that weekly open, watching how we are going to be reacting. If we want to see continuations towards these next levels of liquidity, we need to see these prior highs break. Until then, we have this short-term downtrend or this bias toward the downside, moving into our horizontal support. And this is going to be our new range we're developing between that weekly high and and of course that prior weekly resistance, which is now acting as a support. If we drop below this weekly support, we are going to see strong corrections for the DXY, which are going to increase the possibility for directional continuations upward for the risk asset market. We don't always see, but we do generally see inverse correlation. The same goes for a break toward the upside. If we see that move, it is likely we'll see the risk asset market come down. I am more towards the downward direction. I'm leaning more toward the downward direction, but of course things can change and we need to be adaptable moving into the upcoming data. Of course, on the 12th, we have got our CPI data. This is going to play a massive role in determining where we actually see the DXY move to and the potential implications that may have on the risk asset market. Moving over to the S&P 500, not much happening here. Again, we need to see that positive momentum shift. That RSI needs to break toward the upside to signify the momentum is back in the hands of the buyers and the price action will likely continue upwards. Until we see that RSI break this downtrend, we are going to be still cautiously optimistic, but short term, we are more or less waiting on the sidelines before we see these directional continuations in the upward or downward direction. Moving over, guys, we're going to be taking a look at the charts. We'll jump straight into Bitcoin, but before we do, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchanges I personally trade on. So if you want an exchange that I trade on and I trust, go ahead and sign up. You'll get a 15 to 45% lifetime trading fee discount for using those links, including all of the bonus campaigns we run. We'll play a quick ad, you'll support yourself and you'll support me, and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's dive right back into the content, taking a look at this weekly candle. So we have got the weekly candle closing in 23 hours time. And, you know, we've been yapping on about this weekly candle now for quite some time because it is very important. You know, if we look back at this downward consolidation, this descending channel formation right over here that spanned the last 8 or so months, we were talking about this every single week for a very long time, but look at the consequence. Look at the reaction we had. This massive, 60%, 80% rally toward the upside. So although it became boring, it was relevant. And while it is relevant and applicable and actionable, we will continue to discuss it because it is significant and it is important. The reality is we are in a weekly range. The weekly range is going to be from our weekly highs at 104.45 to our weekly lows at around 93. These weekly directional breakpoints will determine the continuations towards our daily highs or daily lows, being of course the 108K resistance and of course the $88,000 to $92,000 support. As we can see, we have yet closed a weekly candle above or below these weekly ranges, and therefore when we do see a weekly candle close below or above these ranges, that could be an outlier in the data. It could signify that we have the strength required to continue in that direction, as it will be something different to what we have seen during the last 2.5 months of sideways consolidation. So will we see a weekly breakdown in 23.5 hours? I don't think so. I don't think we're going to see a weekly close below this level in the next 23 hours unless the market corrects around, $3,000. I think it could happen, but I don't think it is likely. So it's more likely that we are going to be closing this weekly candle yet again within this weekly range. And that takes us to our daily range. Daily range, of course, is the broader range. This is going to be taking a look at the two horizontal red lines. These are going to be our directional trigger points. Our directional trigger points, in layman's terms, are simply price points on a horizontal scale when broken significantly alter the probabilities for directional continuations in the direction of which the trigger was broken. So in instance, if we were to break above this red line, the probabilities would become massively in favor of macro continuations upwards as opposed to breaks below the horizontal low level. So in this instance, if we want to see directional continuations upwards, we are going to need to break 108.3. If we want to see directional continuations downwards, we need to break 88,000. That gives us a pretty large 20% range between these levels. So let's give you some actionable information. What is the consequence of these levels breaking? Why is it significant? And what are potential targets when those levels are broken? And then we'll zoom down into the smaller time frame and discuss what is happening over here and what is likely in the short term. So in terms of directional continuations toward the downside, this would have a profound macro consequence, not only in terms of our daily charts, but our weekly charts as well. We'll discuss that in a second. And of course, our total market cap charts, which we'll discuss at the end of the video. So if we take a look at our visible range volume profile, we can even zoom out to take a better look at this over here. We can see the visible range volume profile being this yellow, okay, and blue horizontal scale chart, which essentially shows us the volume traded on a horizontal scale vertically as well. So we have this, of course, vertically on the upside, and of course we have got horizontal bars which are larger, okay, come out further and don't come out as much, which represents total volume traded at the particular horizontal price points. Okay, so when we see these massive valleys or these massive mountains, we know more volume was traded, these valleys, less volume was traded. Simple as that. So these ranges on the VRPV can typically show us two things. And one, trigger points and supports / resistances, as well as gaps where volatility is presumed to increase or massively surge. Okay, so if we're taking a look at this, below that $88,000 support level, we can see a gap towards 76,000, okay? We also have that drag into that $68,000 region. So we know that a loss of 88,000 opens up a potential target to 68,000 with a likely target of 76,000. We have also got a volatility range between 88 to 76 where new support could be created. So we could develop a new support between 88 to 76,000 if lost, but it is expected if we drop below the range, we would see a large correction, which would be relatively quick. A quick correction for Bitcoin, which would flush out all of that built up liquidity in this top of the range, and of course, again, result in this gap being closed. So we do not want to see a drop below that region. Now, as a consequence of that move, we would as well see the total market cap lose its macro high time frame support, which is the 2021 high, and we will of course also see the weekly RSI, this chart might not load, the weekly RSI on the weekly chart lose a very important level, which is this 69.02, or 62.09, sorry, 62.09 on the RSI. You can see here, every time we have lost this horizontal level, we have seen double-digit corrections, 10%, 24%, 78%, 55%, etc., etc. We can go back further, we can show you other examples. There have been many, many examples of corrections below 62.09, resulting in double-digit corrections. So we do not want to see the price drop below here. Ideally, we sustain. Now let's talk about the upward break. If we break 108.35, we enter a similar range of volatility because this is going to be price discovery. The price action has never been in this territory before. We have no historical data. We have no indication of how the price action would respond above 108, except educated speculation and of course our psychological levels of significance. So watching whole numbers, 112, 115, 120, watching levels 119,000, levels just under these psychological levels, points of massive significance. This is when we are looking to take profits as we move into price discovery. as we would be entering upon breakouts, upon these trigger points. But ideally, if we take a look at our measured move of this range and apply that to the breakout point, let's just assume the breakout point happens at any particular point in time along this horizontal region, that could take us well into that 120, if not higher region. So there is potential for Bitcoin to move higher here. It all comes down to whether or not we can sustain this low and then continue upwards. Okay, that is going to be the higher time frame charts. We have to be aware of the potential consequences of those moves, and with Nick, we've gone ahead and described that pretty well. Let's move over to the short-term chart. So as we mentioned, guys, for Bitcoin to see directional continuations, this daily range needs to break, right? We need to get out of this range. Now, what needs to happen for Bitcoin to break this range? We are watching for two things: trend, structure, strength. Three things, sorry. Trend, structure, strength. Number one, we are watching for our trend. Do we have a clear, okay, and descriptive downtrend in the price action since we have retested the prior high, which is sitting here? Of course we do. We've got this downtrending diagonal trend line. Do we have a clear and equal distribution in momentum following the overall trajectory of the downtrend? Yes, we do. We have got our retest on the RSI matching the retest of the trend in a overall downtrend. We can see the trend is down, the momentum is down. What are we watching? We are watching for a definitive directional break of the trend, and we need to see momentum flip positive to see that. Upon both of those things occurring, the probabilities will shift in favor of a break of the range high and continuation. So if you're looking for an entry to catch that move upwards, that is more likely going to occur prior to that horizontal trigger. There is a chance you could take a higher risk entry upon the break of this trend line. Again, you have to make your own decisions with that. This isn't me telling you what to do. This is what I will likely do. If I see the break of that region, I see this area flip at support, there's a greater probability that we will see a directional continuation upwards. I'll be watching personally for my own personal entries for some swings there for Bitcoin and maybe for altcoins too, depending on how the altcoin market is looking. But until then, we are underneath our resistance, we are underneath the trend line, we are in a downtrend of momentum, the charts are bearish. So what do we watch for here? We go to a smaller time frame and we are watching for how is the price action being absorbed on this smaller time frame. Are we seeing the selling pressure dissipate, or are we seeing the sellers continue to gain strength? If we take a look here, we don't have all that much information. We've got a respective downtrend over here. Of course, we've got some important levels of liquidity, such as our 104 region. We have got our 200 moving average, which we have tested now twice and rejected from, failed to sustain above. There is not much of an indication that the price action is developing any clear form of structural formation or any clear form of consolidation. This is simply what we would call chop. And if we take a look at the daily chart, we can see that chop represented by these doji candles, which is essentially just indecision. The market was indecisive during the 24-hour period to move up or to move down, so we saw the price action hold steady. We are watching very closely for definitive continuations on the short term, particularly watching the 50 EMA, watching these prior levels, these prior high points over here to potentially break and establish new supports above for continuations, and most importantly, we are watching for higher lows to continue to be established. If we start breaking these prior lows, so we delete everything on the chart really quickly. If we start breaking below these recently established lows, such as these ones over here, okay, that is when we do run the risk of correcting further into back these liquidity levels at 94K. So the price action is not looking amazing. I'm not going to sit here and lie. It's really not looking amazing. There's not a lot of decision over here, but there is opportunity on the higher time frame. It's a game of patience now. It's a game of waiting for those entries and a game of not, I guess, getting bored out of the market. We saw it all the time. We saw it. How many times did we see it down in this range? The price action would chop, people would go away, they give up, and then this massive move came and they'd only jump back into the top. You need to be aware that the market is not always going to be exciting. There are times in the market where it's boring, okay? And just because it's boring, it doesn't mean you shouldn't be paying attention. It's very important to pay attention so you're aware and you have a game plan, because the market is not always going to be good. We have good phases of the market, we have bad phases of the market. We have phases where the market rallies, we have phases where it consolidates, we have phases where it pulls back. It's not always going to be up, up, up. Awesome trading conditions after awesome trading conditions. Sometimes it is going to cycle through good and bad conditions, and that's perfectly fine. Let's move over to the total. So as we said already, the total is looking pretty shaky. We are seeing a bearish divergence here on the weekly. That is not really ideal. We don't really love to see that kind of stuff play out on the weekly. Now, we are really watching this 2021 high point. I think if we can sustain above that 2021 high point, there is hope for Bitcoin to go higher and for the altcoin market. But if we drop below this 2021 high point, I don't really see too much that could save the market from a steeper correction. Steeper correction, we're talking double digit, 10+%, maybe not 30%, but at least 10%. I don't think we can save ourselves from a 10% correction plus if we do drop below here. I think we will see that pullback, as Bitcoin will very likely drop below these lows. But while we sustain above this region, I think there is a good chance we could see a rebound and a continuation, because at the end of the day, guys, support is support until it is not, right? So the probabilities are going to be in favor, maybe not in continuations, right? But the risk trade-off is significantly in favor of directional upwards as opposed to directional downwards, as the invalidation is so tight. So it's kind of stupid, I think, to be excessively bearish over here. I think the best thing to do is to be cautiously optimistic, and it's a word I've been tossing around now for like 3 months because it's still valid, okay? Cautiously optimistic, have hope for the future, but be aware of the profound and significant impacts which could play out if we see these critical levels of support lost for Bitcoin and the total. I think that's the way to play it. Looking at the altcoin market, we have a similar key level of support. This is going to be the Gaussian channel upper band. I think this is a potential reversal point for altcoins. Ideally, we would love to see some of this and develop some sort of channel, right? This would be like the best case scenario for the altcoin market here. We bounce from the upper band of the Gaussian channel, we see a reversal, and that reversal takes us up and through this high, through that 2021 high into the parabolic phase. That would be the most optimistic view for altcoins. And I think that is possible while we sustain above that 2021 key level of resistance, which we'll show you in a second on the weekly chart, which is going to be this 840 billion level. We hold above this support, and we had that 3-day Gaussian channel. So I think altcoins are looking shaky, but again, there is hope for the market. Hope is not lost. There is potential for continuations upwards. At the moment, we are in consolidation. After a large rally, these moving averages are starting to begin to compress. This over here is not definitively bearish, it is not definitively bullish, it is simply sideways consolidation, waiting for those directional continuations. So I think, all in all, guys, keep your eyes on these trigger points, understand the impact of these trigger breaks. That is going to be macro bearish, this is going to be macro bullish, okay? Just keep it simple. Understand what needs to happen in the short term for us to develop these continuations, and watch the immediate short term for any signs of steeper corrections back to 92,000, okay, which run the risk of the weekly close below, or of course, continuations up to retest that trend line and that 4-hour RSI breakout. As for altcoins, do I think altcoin investments are a smart idea? Well, put it this way, I never really advise investing in altcoins. They're situational investments at best, right? If you look at every single human being who's ever traded altcoins on the planet, okay, I would say like 95% of them are already at a loss, and anyone who's held an altcoin for longer than 3 or so months, besides a select, 4-month window within like a 4.5-year range, they're most likely at a loss. So altcoins, if we just look at the data, they're historically not good investments. 99.999% of them just fail. I think altcoins are situational investments. I think they're really, really, really good at particular times, and really, really, really bad at pretty much every other time except that particular time. If you're trading altcoins, whole different story. You can trade altcoins basically through any conditions, of course, but when we're talking about spot positions, holding altcoins, they are very selective, and you have to be particular with when you enter. Otherwise, you run the risk of holding your bags down 98%, like pretty much everyone does in the market. So thanks for tuning in, guys. Have a good day. Catch you guys in tomorrow's video, and I'll see you then. Bye.